picture this. It's midday, April 16th, 2026.
Right.
You pull up your brokerage app, and Rocket Lab USA, so ticker symbol RKLB, is trading at $80.72 right now.
Which is just a crazy number.
It really is. I mean,
Yeah.
that's a massive, 23.2% spike just today?
Yeah, a violently powerful bullish breakout.
Exactly. You're looking at this giant green candle on the chart, and it instantly triggers FOMO, for anyone watching from the sidelines. But before you hit that buy button, you really have to ask yourself a pretty uncomfortable question.
For sure.
Is this a strong buy of an undervalued space pioneer that's finally taking its place next to the giants? Or, are retail traders just walking blindfolded into a classic value trap?
A trap right as the executives are, cashing out.
Exactly. Pumping the stock up while insiders walk away with millions. Welcome to the deep dive. That's the exact dilemma we're decoding today.
It's the ultimate market dilemma right now.
Yeah, our goal today is to really unpack the financial reality under the hood. We're going to decode the technical chart signals flashing right now and just dive straight into this fierce bull versus bear debate surrounding Rocket Lab.
Right, to help you understand what's actually happening on the launch pad.
Exactly. And because this debate gets incredibly heated online, we need you to like the video and subscribe to our YouTube channel. And we're making it compulsory to leave a comment with your feedback today.
Yeah, we definitely want to know whose side you're on.
We do. And as a quick reminder, this deep dive is an educational debate. It's an exploration of the data, but absolutely not financial advice.
Right, we're here to analyze the mechanics, not manage your portfolio.
Spot on. So, okay, let's unpack this. We see the stock price soaring into the stratosphere today, but we really need to look under the hood to see if the financial engine can, actually sustain this altitude.
Yeah, because in aerospace, it's so capital intensive. You have to separate the actual operational milestones from pure speculative hype.
Definitely. So let's pull up the stats. Like I said, current price is $80.72, and that's bouncing off an April 7th low of $66.32.
Which was just last week.
Right. But look at the 52-week range. It is extreme.
Well, it's wild.
A low of $18.21 all the way up to $99.58. And market cap is sitting at $46.56 billion right now.
Which, that is a staggering valuation for a company that's fundamentally still burning through cash reserves to build its main product.
It is. So let's look at the income statement for FY 2025 to see that burn. Total revenue hit $601.8 million.
So that's up 38% year over year.
Yeah, mostly driven by their space systems segment. And gross profit is $207.2 million, so a 34.4% GAAP margin. On paper, right, a 38% growth rate sounds incredible.
Sounds like they're firing on all cylinders.
Exactly. And then you look at the bottom line. Net loss was negative $198.2 million. Basic and diluted EPS is at minus 27 cents. And looking ahead, their Q1 2026 guidance expects, $185 to $200 million in revenue?
Yeah, but still an adjusted EBITDA loss of 21 to 27 million.
Right. So it's like looking at a race car that's setting track records for speed with that 38% revenue growth.
Oh, I like that analogy.
Yeah. But the dashboard is blinking low fuel and engine warning at the exact same time because of the massive cash burn.
That's incredibly accurate. And, let's break down why that cash burn is happening. When you move from the income statement over to the balance sheet and cash flow, things get intense.
Oh, severely negative.
Yeah. 2025 free cash flow was minus $321.8 million. And a huge chunk of that, about $156.3 million, went straight into capital expenditures, or CapEx, for the Neutron rocket development.
Which is just a staggering amount of cash.
It is. But you have to remember, building a heavy lift rocket isn't like, coding an app where your main cost is a few developers and servers.
Right.
It requires massive, highly specialized physical infrastructure. Launch pads, composite manufacturing, engine test sites. The market sometimes forgives negative free cash flow if the top line growth is explosive enough.
Because they're building the toll bridge, right? You got to pour the concrete before anyone pays the toll.
Exactly. The 38% growth proves the demand is real, but that all assumes the execution goes perfectly.
Well, and that brings us to the news, which is a massive contradiction. If the company is growing revenue by nearly 40% and they have all this momentum, why are the pilots of this rocket suddenly gailing out?
The insider selling.
Yeah. We need to contrast the recent positive news against this huge wave of insider selling. Because there is a lot of good news.
There really is. You've got the April 14th Mynaric acquisition.
Right, internalizing the laser comms.
Yeah, which is huge for margins. Plus the new Gauss electric thruster, a 58% year-over-year backlog growth. And they're riding that sector-wide hype from the recent SpaceX IPO.
Everything sounds perfect.
Yeah.
But then you look at Q1 2026, and there's a massive insider exodus.
Yeah, the optics aren't great.
Not at all.
Wow.
CEO Peter Beck sold about 1.3 million in March at like $69.59. The COO, Frank Klein, sold 5.7 million.
And the big one.
The CFO, Adam Spice, executed a massive $103 million sale in January, plus another 4.4 million in March. I mean, people say, oh, it's for tax purposes or a planned 10b5-1 program.
Right, that's the standard defense.
But I'm sorry, I'm selling some shares for taxes, but $103 million from the CFO, that's not just covering a tax bill, that's buying a private island. Does he know something we don't?
What's fascinating here is the duality of it. On one hand, yes, these executives have had their entire net worth tied up in a highly volatile stock for years. Diversifying is just standard wealth management.
Sure.
But on the other hand, you can't ignore the very real psychological signal a $103 million stock dump sends to the market, especially from the CFO.
Right before major execution milestones.
Exactly. It removes his skin from the game when the stakes are highest. It definitely spooks retail investors.
Well, with these mixed signals from the executives and the balance sheet, let's bypass the human element for a second. Let's just look at what the raw market data, the technicals, and the order flow is telling us right now.
Good idea. The chart doesn't lie.
No, it doesn't. And right now, the trend is aggressively bullish.
Very aggressive.
We've got a 14-day RSI sitting at 60.24. So that's bullish momentum, but, getting close to overbought territory.
Well, it's getting a little hot.
Yeah. Man CD is at 0.874, which is flashing a strong buy. And all the moving averages, the 5, 50, and 200-day, they all signal strong buy, hovering in that $68 to $72 range.
Which acts as our major support zone.
Exactly. As for resistance, we're looking at today's high of $82.02, then $85, and finally that all-time high of $99.58.
Support is solid at $76.58, but that $68.75 to $69.83 area is really the line in the sand for this bullish thesis.
Yeah, but here's where it gets really interesting.
Okay.
The order flow. Short interest is only 24.9 million shares. That is just 5% of the float.
That's nothing.
Right, and the borrow fee is incredibly low, just 0.27%. I mean, it's like a tug of war where the bulls are pulling with all their might, but the bears on the other side aren't even sweating or trying to fight back yet. There's zero short squeeze pressure driving this 23% jump.
And that lack of short seller resistance is exactly why short-term strength can quickly become short-term weakness.
Really? How so?
Well, if this daily rally is fueled entirely by long buyers rather than shorts panicking and covering, those buyers can run out of momentum.
Ah, I see.
If the stock pushes to test that $85 resistance, the RSI will almost certainly tip over 70.
Right, into overbought.
Exactly. And when an overbought RSI hits a major historical resistance level, that's when traders suddenly take profits and you see a violent pullback.
Okay, so the technicals show the stock is charging hard toward a brick wall, basically.
Yeah.
But what is the actual value of the company? I mean, is this a rocket priced for a discount or just a value trap designed to catch retail momentum chasers?
The analyst community is incredibly fractured on this. The consensus is technically a moderate buy, but we've got 13 buys, 2 strong buys, 5 holds, and 1 sell.
That's all over the place.
Completely scattered. The average price target implies fair value is at $79.85.
Which means we're basically fully valued today at $80.72.
Right. But Bank of America has a high target of $120, and the low target is way down at $50.
That is a massive spread. Are we valuing this as a pioneering space company making history or a traditional manufacturing company losing nearly $200 million a year? Because those two lenses give you wildly different price tags.
If we connect this to the bigger picture, it's the classic growth stock dilemma. Some models say it's 30% undervalued, pegging fair value around $98 because they're factoring in the Neutron ramp up and those high margin services.
Basically assuming everything goes right.
Yes, they're pricing in the future monopoly. But contrarians argue it screens as a value trap. On traditional multiples, it's wildly overvalued due to the sustained net losses.
And this is why retail traders get trapped, right?
Exactly. They get caught buying at peak hype based on forward-looking promises rather than the current reality of the balance sheet.
Because all those forward-looking promises rely on the company actually executing. Which brings us to the execution risks. Ultimately, whether Rocket Lab hits 120 or crashes to 50 depends entirely on one massive looming binary event.
The maiden flight of the Neutron rocket.
Yep. Let's outline the bull case first. Best case recovery and growth scenario relies on, like you said, successful Mynaric integration, continued backlog expansion, and a absolutely flawless maiden flight of Neutron.
Right, turning those high-margin services into a profitable empire.
Exactly. But the bear case, the continuation lower, is terrifyingly simple. Execution risk.
Any delay or catastrophic failure of Neutron's maiden flight will crush the valuation.
It all rides on one rocket. It's the ultimate put all your chips on red moment at the casino for this company.
It really is.
You can have all the 58% backlog growth you want, but if the rocket doesn't fly, the stock doesn't fly.
And we can't ignore the downside volatility here. If there are chronic delays, the massive cash burn means they'll eventually need to raise more capital.
Meaning dilution.
Heavy dilution. Retail traders often end up holding the bag during these binary events, caught between the reality of capital expenditures and the dream of space dominance.
It's a brutal wake-up call when the dilution hits. So bringing it all together, the financials, the insider selling, the technicals, the risks, let's form a clear view of the outlook.
Well, in the short term, like over the next few weeks, the story is entirely about testing that $85 resistance level.
To see if the buyers have enough gas in the tank.
Exactly. But in the medium to long term, the entire future of the company hinges entirely on the Neutron launch and crossing that threshold into positive net margins.
So what does this all mean? We just had a fascinating debate about a thrilling company with incredible momentum, but, it's heavily weighed down by severe cash burn and executives cashing out generational wealth right before launch.
It's high stakes for sure, which raises an important question for you to think about.
Well, lay it on us.
The data shows no short squeeze happening right now, but with an options chain out there begging to be analyzed for implied volatility. Are the big institutional players quietly placing their bets for a massive post-launch swing?
Oh, wow, using derivatives while everyone else is watching the underlying stock.
That is a brilliant cliffhanger to leave everyone with.
Something to mull over for sure.
Absolutely. Well, make sure you like the video, subscribe, and please leave a comment with your own take. Is RKLB a buy or a trap?
We want to hear your side.
We do. And again, no financial advice here, just trying to make sense of the market. Thanks for listening, and we'll catch you on the next deep dive.